Hello and welcome back to the ROI channel, the channel that's obsessed with the art and science of return on investment. And today, back with a company I've covered before, we have a very interesting speculation trade on what is an investment grade company, albeit a cyclical. I'm going to talk about that today. It is a heavy weighting now in the Crassus investment portfolio. So let's get straight into it, guys. If you like this content, please do like and subscribe to the YouTube channel. Over half of the viewers like the channel, watch the channel, but don't like and subscribe. So please do me a favor. It does help the algorithms and gives me more motivation to spend time doing this, which is just my hobby, as opposed to my normal routine of making money. So the Braksem rumors, so tempting. Can see the opportunity, how to play it. There's risk and there's reward. I really like it. But today, disclaimer, nothing I say is advice, guys, especially never is, but especially today with what I'm doing, it is not suitable for everyone. Please do not construe any of what you hear me say or see me write or any of my content as advice. It isn't. It's just my opinion. It's what I'm doing. It's thoughts of one crazy man, nothing more. Could be right, could be wrong. I don't know. What's right for me may not be right for you. And I'm not a financial advisor. So if you do want to piggyback on my trades, you can copy the etoro portfolio. We'll talk about that. And today, actually, briefly, let me go into it. We can go back and forth. Only 14 copiers, guys, for a portfolio that's returned year to date, call it 26%. A lot of that in dividends. So if you are interested in having me work for you, jump on the link in the description and copy the portfolio. If not, by all means, follow me on Twitter and, of course, YouTube. So details of the deal. Let me go into it. I've tried to keep this super concise, taken out all the key details for you, put it into English, literally from Portuguese. So the idea is ADNOC, who are they? They're an Abu Dhabi private equity based. They did make a bid earlier in this year for the same company with Apollo, another private equity group, and it was unsuccessful. It was I did a video about this deal, didn't go through, and this time ADNOC have come back offering 10.5 billion Brazilian reais for 38.3% of the share capital. But, and this is the key detail, that slice that they're acquiring from Novonor, I believe is the owner, they actually own 50.1% of the voting capital. So if ADNOC are successful in acquiring this stake, they will essentially be majority partners in the company, Braksem. Okay. Now, obviously, it's not binding. It hasn't, depends on acceptance. And Petrobras, I believe, will have a big amount to say for that. So there are a few issues here that I'll get into. Braxton's proposal provides this time half the payment upfront in cash, and they're going to pay the bank. The bank's going to release 35% of the shares, leaving 3% of the share capital for Novonor to keep. And then the rest of the payment will be with debt securities over 7 years. So the first 3 years, I believe, there will be no cash payout. The interest will accrue onto the value of the notes. And then interest will be paid from the fourth year onwards. And at the end of the seventh year, the rest of the debt will be amortized back to the note holders. So what does all this mean? What are we looking at? What's the price per share? What are the shares trading at now? So if the deal goes through, how much money would I make if I own the shares? There is potentially roughly 100% arbitrage on the upside, and obviously the deal has to go through. So if ADNOC offers what is the equivalent of 37.29 reais per share, the way that you get access to this, most people do, I do anyway, is via the US listed ADRs. So you'll see they closed last night at $70.90. You've got two ADRs for each share. So each ADR, I guess, represents two shares. Okay. And that's what you're buying. Like with Ecopetrol, you can buy it on the Bolsa, but it's just easier to buy the ADRs. And you get 20 ADRs you get 20 shares per ADR. Okay. So always take that into account when you're calculating your dividend yields, etc. So if you break it down, what they're actually offering, the at time of reference, the offer price is at $15.20 per ADR. So essentially, you've got 100% upside. If you're wanting to know the date is 14th of November, and here I'm looking at what 37.29 Brazilian reais would be, and that would be 760 US dollars times two. Okay, so that's where I got that from, just in case you're wondering. I hope you're all following me. I'm sure you are. So okay, that's simple enough. The deal goes through, make 100% on the upside. Wonderful. Everyone's happy with that if you're a shareholder. How do we get to that point? That's obviously the question. So what could go wrong? Well, Petrobras could disagree, okay, and work to block the deal, like they did with the first deal. The first offer. The first offer was actually high. It was about 40 reais, if I remember, but it was more like a 20% upfront, and then different finicky ways of financing. And so I just think that Petrobras couldn't be bothered, and they didn't want to borrow it. So anyway, they went back. Apollo Group is now gone, and Adnor's coming back to the table with a different offer. So how likely is that? Obviously, I don't know. I'm not sitting in the Petrobras C-suite. I think on paper it's very unlikely, and for reasons that I've shared. Novo Nordisk's 38% of capital holds 50.1% of the voting power. So Novo Nordisk, they'll sell quite a bit of that. I believe they're going to sell 35-ish% upfront. So that would put them right on a par in terms of voting power with Petrobras, and they should be able to then come to the table. But I don't know. So that's on paper, but honestly, who the hell knows how much influence Petrobras has? Remember, this is a state-owned enterprise. They own almost half of this Braksem Chemicals company. They're just, all I'm saying here is that there may be, I don't know, there may be some actors that have vested interest in the deal not going through. What do I know? You just got to put it on. You've got to put it out there. Then, if the deal does go through, but the minority shareholders get screwed, in other words, it'll come down to an interpretation between Brazilian corporate law in general versus Braxton's own bylaws. And sorry for going back and forth, but I'm just going to have to read this so that you get the point. So there's a few issues here. So the overall securities law in Brazil, they've got this weird thing saying that in the case of the sale of control, as per the legislation, the buyer of the control will offer up to a maximum of 80% of the premium paid to the vendor. Okay. Which is, I guess, to prevent like minorities with vested interests having an outsized gain. I don't really know why that would be the law, but it is anyway. So for that control to go through, you'd have to 50% of the capital and one ordinary share. Well, you'd certainly have more than 50% of the voting capital and one share, so that would count. And there's precedents for that, citing Rede Francesa Cassino Grupo Pau de Açúcar. In the case of Braksem, it's a level 1B3 company. And so according to this interpretation here, não seria devido às ações, and sorry for my Portuguese, it wouldn't be due to the minority shareholders being a Class A preferential company. However, Braksem does have its own bylaws, and its own bylaws say that that in the event of a takeover, sale of control, all shareholders must receive the same price, essentially, for the sale of the shares. Okay, and that's it. Ou pelo mesmo preço pago ao vendedor do controle. Okay, sorry, I'm still working on my Portuguese, but the point is, you get the idea. All of the minority shareholders would need to get the same amount offered. And let's take a look. So here I am on Braxton's website here. So this is the corporate structure. It's a little weird, I have to say, that you got 38% of the stock that has 50.1% of the voting control. So that's where you see I'm getting this idea from. Petrobras is here. They've got 47% of the control. And then the outsiders, that would be us. or me, you, if you own the stock, and you've got 25% up for float, but that Class A share that you saw in the article before only has 2.9% of the vote. Okay. So I'm fairly confident, according to the bylaws, that these guys here, which is us, would need to receive the same amount as a Novanor, and I guess Petrobras would have to receive the same amount as Novanor if they were to buy out their shares. I don't think that's going to happen. It's just a bit of a wild card, I've just literally read to you the corporate bylaws, and what does Vin Diesel say in Fast and Furious? This is Brazil, so I mean, I guess there's that risk, but surely. In any case, coming back to just thinking about this thing, so you got your downside. Obviously, the deal doesn't go through, and the minorities get shafted, or the deal does go through, and the minorities don't get the same price, don't get you 100% upside. The shares would probably fall to go nowhere. It's okay standalone cyclical. I know a lot of people like the company as a swing trade, but it does have an ungodly amount of debt. It has a lot of debt. There's no way to say it. Now, it's not as bad as you see here. So net debt to EBITDA at 26 times. It's using last year's EBITDA, and there was all sorts of issues. The company had not a great year, and then you have they're just settling this civil case where they made all sorts of a mess, sinking a bloody town in Brazil. And so that part, they've got the cash for that. They've paid out most of it. It's not the issue people think it is. It's it's the debt load. So I don't know. I mean, if ADNOR are willing to come on and take on all that debt at a premium and buy them out at a premium, there must be a hell of a lot of value in this company, number one. And number two, if you're minority shareholders, and even if you're Petrobras, that's not the worst thing in the world. If someone's coming in and paying a big premium to take on a lot of that balance sheet woes, I don't know. I guess you're tossing up. You would be losing some control, but you'd be getting a nice deal in terms of someone coming and taking the heat off your balance sheet for you. If we look low, not much lower than where we are currently trading, and then 12.6 on the 52-week high. If I go into my the ads trading view here, you can see, I mean, if we really zoom out, you can see the volatility on this thing in terms of its cyclical earnings. It could be, I don't know, 4 or 5 times higher than where it's currently trading at, or 6 times from the peak to trough. You can see in the market already, people are bidding this thing up at putting a bid at 833. And so I think that people are getting over the idea that initially there were not going to be tag along rights to the minority shareholders. I think that tells me the market's starting to understand that they're wrong on that it's not the danger that people think. So you could have that, or you could decide not to play it, and you'd still have your exposure via PBR. There's another option. The upside is obviously the deal goes through and all the minority shareholders get the full offer price, and you get 100% ARB on your position plus your holdings through your PBR stock or PBRA. In my case, you'd have those holdings increase as well by the same amount. So obviously that'll be a really nice one. And so how am I going to play it? So I'm going to increase my exposure to PBR because I like the company anyway. The thing is increasing its production. Its refineries being marked down and basically at nothing by the market. It's paying 15-16% dividend yield. I like it. What do you want me to say? They go out into Guyana and they hit the pre-salt again and they increase production. I mean, the thing produces like the majors in the US with 25% of the price tag. Then so that you'd be getting exposure indirectly. So I'm going to do that because I wanted to do that anyway. Directly, how do we do that? Well, you can just buy some equity, and you can be if you do your evaluation on the company, you think you like it anyway, you could just sit in that. I'm actually really I don't want to sit in the company for that long. I think it would be a cyclical trade for me anyway. So I'm actually putting in a decently levered long position with a stop loss. I want to really maximize this thing. Either this thing's going to work out or it doesn't. I'm going to go for this 100% arb and lever it up, or it's not going to happen. Simple as that. And so I'm going to have a stop loss. I'm going to put it at about 2% of account. And for that to happen, for that to be hit and for me to be stopped out from where it's currently trading, that thing would need to drop 35%, okay? Which would be a long, from here would be lower than its share price other than during the GFC. Even during COVID, I don't think it got quite so low. It'd be right on the COVID lows. That's where this thing has been sold off so violently. So either for me to lose, I'd lose 2% of my capital. The thing would have to drop 35%. Going back to COVID lows, remember when oil traded at negative on the futures contract, and for me to have the chance of making 100% upside on straight equity, and if I'm going to lever it up, which I am, there could be a 200% gain there. We'll see. So that's what I'm doing. Don't do this if you're new to this game. What you can do is you can just copy the portfolio and then you'll be going along for the ride. So there you have it, guys. Not advice, but my verdict for me personally, I'm going long. There's asymmetry on offer. It's a speculation. It's a trade. But I think it's worthwhile at the moment. I'm going levered long and I'm increasing my exposure via PBR. And I think that's it. That's all I want to share. Please do like and subscribe to the channel. If you want exposure, yeah, feel free to take a look at the portfolio and you can copy it. Otherwise, I wish you all the very best and I'll be back with another video shortly. Take care.